Now that we are the tapering, it's like when you're a drug addict and you stop getting these drugs, you get more nervous, you get more fragile. And that's what we're seeing from the beginning of the year.
So Babak, 2016 has seen some significant market moves already this year. What have been the biggest challenges for investors so far this year?
This is a very difficult year. I mean, we started this year with China, you've seen, and then with the oil price going down. Basically, from last year until those past years, the financial markets were on the kind of EPO drug with the central bank injecting that much liquidity. And now that we are the tapering, it's like when you're a drug addict and you stop getting these drugs, you get more nervous, you get more fragile. And that's what we're seeing from the beginning of the year. And last year, when we started to ask to the institutional investors what they think through our survey, we do this global survey when we ask over 600 institutional investors from 29 countries what they think, what's their idea, what's their allocation. They told us already that they're going to be very concerned for 2016, and 64% globally say it's going to be harder to get alpha in 2016.
And that's a massive statistic. So those were the challenges. What are the opportunities in the markets at present?
So when we have those risk factors, we have also obviously opportunities that come at the same time. When at Natixis Global Asset Management we started to develop our durable portfolio construction philosophy, it's key that when we go after those opportunities, it's key to start to put the risk first. This is how we can build a durable portfolio. This is how we can build something more strong, more robust in those markets. And we see that institutional investors around the globe, but also in Switzerland, are starting to see other ways to take those opportunities into account. And some of the ways are alternative investments, hard investments, real assets investments. And it's probably going to go more and more into the portfolios of institutional investors from 2016 and onward.
Okay, and investors are also starting to see this low for long yield with fixed income. So is this something that investors should get used to?
Yes, in Switzerland, the 10-year rate is in fact negative, so we are minus 20-something basis points. On the other side, institutional investors, they have to meet a minimum interest rate of around 1.75% per year. So it means that the risk-free rate is not anymore available to them. They need to go after riskier assets, and this is why hard investment. This is why also infrastructure. This is why also real estate are the sectors where they're really clearly looking at. But when you go after those risky assets, on one side you have also to protect the downside. Even if institutional investors have a long-term investment horizons, they need to explain. They need to explain to their committee why they experience drawdowns, and that's why they need to put the risk first in their investment construction, and they need sometimes the help of asset managers to build those more durable portfolios.
Sure, and we've talked about the challenges, the opportunities, and the low for long yield investment. So have you noticed a change in investors' positions following all these challenges and opportunities?
Yes, we've seen that when we ask to the institutional investors what they're going to do in 2016, so we asked that to them end of last year. They told us that the biggest concern is, of course, their fixed income portfolio. So globally, the fixed income allocation represents 28% of the institutional investors' strategic asset allocation. So we asked them what they're going to do, and as you can see on this chart, they're going to decrease. 42% answer they're going to decrease this fixed income buckets. But investment is like driving a car. If you have one of your tires which is getting empty, you cannot just adapt the other tires. You need to change this tire. And this is why institutional investors' concern is really to find a different asset allocation, a different strategy that could change this fixed income allocation, because you still need this decorrelation between the asset classes. And this is why alternative investment is probably the most important subject for them this year. We ask them globally, and they say, as you can see here, that 41% want to increase the allocation to alternative investment. It's even more important in Switzerland, where 51% are increasing their asset allocation in hedge fund. And this is how they're going to balance and meet the long-term results on one side, but also diversify enough their portfolios today.
Fantastic. Well, Babak, thank you so much for coming in today and sharing your insights with us. Thank
you very much, Jessica. My pleasure.
Well, that's all from me, but for all the latest Dugoscopy updates and interviews, do keep clicking back. Goodbye for now.